A pair of key interest rate announcements are expected in Canada and south of the border tomorrow, and many economists aren't expecting there to be any more changes.
Let's go live to Ottawa now. CTV's Colton Praill standing by live. So, Colton, all eyes on the Bank of Canada and, of course, the U.S. Fed tomorrow. How could the trade war impact the interest rate decisions that we're going to be seeing in the next 24 hours?
Yeah, really, it's the job of these central banks to balance the health of the economy. And obviously, the trade war is having a huge impact on the health of our economy, but there is much more to it. If things were to get worse in Canada, we could see interest rates drop down the line. But because so much of the impact so far has been sectoral, because there is still so much uncertainty with where things are going in the trade war, that's why you're likely seeing the Bank of Canada and the U.S. Federal Reserve stand still with where they're at. And we've seen that pattern in the past. If the bank holds its rate at 2.7%, it'll be the third time they've done so, the third decision in a row that they've done so. In the U.S., we're talking about a rate that hasn't changed since December. It's this uncertainty that is really fueling these decisions from the banks. However, it's also worth pointing out there is a risk here. If you continue in this, we're still seeing, a sticky inflation. We are still seeing core inflation rates in the latest numbers increasing slightly, hanging at just about 3%. And so there is an element of this where there is concern if things do worsen that those rates might be a little bit too high. It's why it's possible, certainly in that September timeframe, that we could see some potential rate cuts, according to financial experts in the country. But right now, that uncertainty and that risk of future tariff deals keeping some sort of baseline tariff in place, it's why you're seeing the bank not make too many moves in an effort to try to not rock the boat.
Okay, and Colton, what will investors be looking for from the two banks when they release their decisions?
From the Bank of Canada, it's more of a long-term forecast. We haven't seen, certainly in its past decision, we didn't see a very specific forecast from the Bank of Canada. They offered a couple of scenarios of what things might look like given different tariff outlooks. At a certain point, though, you do need the central bank to be clear on where it thinks this country is going, what it thinks the financial situation is going to look like in the future. And so that's a big thing that investors in Canada are going to be looking for. How is the federal bank planning to respond to this moving forward? What's its fiscal policy going to look like, or expected to look like, for the rest of the year? For the U.S., it's really more changes in the federal bank. We've seen the president really pushing for a weaker dollar, saying that he wants to replace Jerome Powell. Could we see some movement at the federal bank? Are we seeing enough political pressure that they're going to consider lowering interest rates? Like I mentioned, theirs haven't changed since December. And obviously, if those rates do start to change, that means a lower dollar. It means less foreign investment. And that would have a very significant impact on which way the markets move and how investors respond to bond purchases and the like as they move forward in that market.
Okay, CTV's Colton Praill joining us live with this. Thanks so much.